Well, as the tech sector closed as a record high today, our next guest says the comeback rally may be getting ready to cool off. Chart master Carter Worth is over at the plaza to break it all down. Hey, Carter.
Sure. So let's look at a few things. What we have, of course, is the mother of all V's. It's virtually perfect. You can see it. We've got our plunge. We have our ricochet. And it is not random when you get back to a former high. Typically, you contend with it before you can exceed it. So, in fact, just to show you how precise these levels are, the peak, it was a Wednesday. It was October 3rd, 2018, 1338.90. This was also a Wednesday, April 3rd, just a week ago, 1338.77. We closed 1 point below those two levels today. The point being that when you get back to a high, more often than not, rather than breaking out, you have to contend with the high, which is to say you're getting memory from here. People who bought poorly, who would love to get their money back, and then you're getting memory from here. People who bought well, who want to book their gains. And all of that congestion that happens at a former top. Let's move forward and take a look at one of two things. Now, it's, of course, percentages work differently on the way down and the way up. You have a 25% plunge, you have a 32% recovery, and again, unchanged, virtually unchanged on a 6-month basis. If you look at it this way, there's the line. There are two things that happen in principle: backing and filling, or backing away, which is that we set up a double top and you do get this kind of action. Either way, I think this is actually a better sale here than it is anything else. A few stocks that there are always good ones and bad ones. Workday, a little hot, a little too far above trend. In principle, when you trade too far above trend, you check back, you check back, you check back, and I think you're due for a check back. Another one that's similar, that's also a bit hot, is Intuit. And what we know is that uptrends are characterized by counter-trend sell-offs, and we're due for one as well. By way of comparison, consider the third, which I like a lot. I mean, this is just, all those other stocks are back at their highs. AMAT is just starting to bottom. So we have all the principles of how something tops, how something bottoms, how something tops, how something bottoms. We like this a lot. We think that's the kind of thing you want to do in this market. Not go after the ones that are at the high, find those that have lagged and play them for catch-up.
All right, Carter, come on over. Evan will bring the chair over.
Some happy music.
Thank you, Evan. It's our fake game show music.
Sorry, no.
I mean, you give me a bottle cap and a...
Sorry, we're low on the candy bag today, so no nuggets for you.
The bag's in trouble tonight. We'll get into that later.
Dan said something shocking to me earlier in the show, and that is he said it's a foregone conclusion that the S&P 500 will go back to record highs. True or false?
I would say that's a rounding error, right? Is the foregone conclusion it can back away 2%, it can go up 1%. I guess the issue is this. Equities globally peaked on the 26th of January, 2018, where 15 months later, the S&P is up 0.5%. And we know that the DAX, the CAC Cameron, the MSA, All Country World Index, all of them are below, right? And so from here, you really need the cyclicals, right? You need industrials and financials, some of the core middle and healthcare to come to life. Without that, we're just back to the same issues that we had before. Crowding and clustering. Top 5 stocks are more in the bottom 250. That remains the case. They can't pull the weight forever.
Carter, what do you think? We talked about small caps, I know, on Friday on Options Action. You mentioned it, but, you know, we still have the Russell 2000 down 8.5% from those highs, and it's still consolidating here. Are we going to get a breakout? And what does that mean relative to large caps?
Yeah, I mean, I think a perfect pairs trade is actually to be short something like an SMH or the tech sector, however you want to do it, QQ, and play long beta some of the small caps for catch-up. It is a financial bet, though, right, because we know the weighting is so large, financial stocks in the Russell 2000.
So you think there will be a catch-up on the Russell?
I think they catch up.
Carter, what do you think about an Apple, which has only recently kind of gotten back into favor, a Google, which has largely been, if anything, of kind of the mega cap techs, I think has behaved probably the most conservatively. So as we go into this period where mega cap tech in the past has been actually outperforming because growth has been a concern, don't you have some tailwind coming from these mega caps that really are I think are under-owned? Certainly sentiment is lower than it was the last time.
You know what? I think they're particularly good relative to the mid-cap tech. It's those software names like Twilio and Data and Now that have really shot the moon, and those have the most risk.
Yeah.
I'd much rather pick a sort of a slower-moving super cap name in tech than some of those.
So when you look at, we're at the same point we were at 15 months ago. Is the volume different? What What is different?
I mean, if you think about what
Since
it
you don't
means
care
is
about some of the fundamentals
it's
to buy
not,
here.
it's not different. What we know is that you always have heavier volume on the way down than you do on the way up. I mean, that's just because when people sell, when they buy reluctantly. They have limits, and they say, oh, I missed it. Okay, just make it 2,000 instead of 4. When they sell, they say, get me out, right? They dump with abandon. But the principle is this, that if equities have made no progress in 15 months, one of two interpretations. That means how refreshed they are. Multiples are building and they're cheap. Or what does it say about risk assets that equities have made no progress in 15 months? And yet, to make no progress and have massive drawdowns, if one was producing a result like that managing money, it's a terrible result, right? Having a drawdown of 20%, having one of 12% a year ago, it's uninspiring. And that's the big issue. Are we in the process of a major top for equities and a major top in the economy? No one knows. I have my biases, as I'm sure you do, but the risk, of course, is that we've come a long way.
Carter, thank you.
Thank
Good
you.
to see you. Carter Braxton-Worth of Cornerstone. All right, so industrials will be key in during earnings season. What is the one stock that you would look for? What's on your radar?
So I think you have to look for, we nailed it in the beginning of the show, you have to look for tech companies. But I also believe that a lot of these names that he's talking about that have went to the moon and popped, people are making room for in their portfolio with the IPOs. That's a never-ending list
So
that's
there's an
coming.
ATM effect.
So I think there's an ATM effect. So I would watch those companies that aren't the mega cap tech sector. Watch the other ones because you could see them being liquidated to make room for them.